Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the crazy world of corporate finance. Today we're diving into Sky Century Investment Inc.'s latest quarterly report, a document that might just give us a peek into how this company is really doing. Before we jump in, if you like getting the real story behind financial filings without all the jargon, hit that subscribe button, and if you want to chat more about this stuff, we have a Discord community linked in the description below. Alright, let's get straight to it. Sky Century Investment Inc. is reporting its financials for the quarter ending the 30th of November 2025. Typically, these reports are packed with numbers, and our job is to find the story those numbers are telling us, what is really going on behind the scenes. First up, we're looking at their balance sheet. This is like a snapshot of what the company owns and what it owes at a specific point in time. As of the 30th of November 2025, they had about $4,000 in current assets, which includes their cash. Now, that might sound really low, and it is. Their total assets are around $113,000. On the flip side, their liabilities are much higher. They owe about $427,000. This means they have a significant negative working capital, which is a big red flag. It suggests they might have trouble paying their short-term bills. Now let's look at their income statement, which shows how much money they made and spent over a period. For the 3 months ending the 30th of November 2025, their total revenue was about $13,000. That's a huge jump from zero revenue in the same period of 2024. That sounds good at first glance, right? But then we see their cost of revenue was almost $18,500. This means they spent more to generate that revenue than they actually brought in, leading to a negative gross profit. Their operating expenses were around $22,000. All in all, for this quarter, they reported a net loss of about $28,000. Compare that to the previous year's net loss of around $41,000. So the loss got smaller, but they are still losing money. This decrease in net loss is mainly because revenue went from $0 to $13,000 and operating expenses went down a bit. However, the cost of revenue increased significantly. This increase was due to acquiring something called RSS feeds in November 2025. It seems like they are spending money on acquiring these assets, which adds to their expenses. Here in the stockholders' equity section, we see a recurring theme, a deficit. For the 3 months ending the 30th of November 2025, they had a deficit of about $313,000. This means the company owes more than it is worth based on its equity. This deficit has been growing. What is interesting is the steady number of common shares outstanding at over 223 million. They also have preferred stock issued. The additional paid-in capital remains the same, suggesting no new significant investment in this category. The cash flow statement tells us where their cash came from and where it went. For the 3 months ending the 30th of November 2025, their cash used in operating activities was about $6,000. This is an improvement from the previous year when they used about $10,000 in operations. However, they used a significant $18,000 in investing activities. This was for purchasing RSS feeds, which aligns with what we saw in the cost of revenue and intangible assets. Financing activities brought in about $24,000, mainly from related party loans, which is a critical source of funding for them. Let's talk about their assets a bit more. They have intangible assets, which are things you can't touch but have value, like data or software. Their intangible assets are over $109,000. The notes mention they acquired databases, RSS feeds, and API code, and these are being amortized over 3 years. This is a significant chunk of their assets, and the costs associated with maintaining and acquiring these digital assets are impacting their financials. It looks like they're investing heavily in these digital products. The company itself has evolved. It started in 2012 and recently shifted its focus towards its services. They mention they are in a startup stage and have faced losses from the beginning. This is a really important note. The report states that these financial statements were prepared assuming the company will continue as a going concern. However, they openly admit that their ability to continue is dependent on support from shareholders and their ongoing search for new investors. They have a net loss for the quarter and a large accumulated deficit. This all points to substantial doubt about their ability to continue as a going concern. This is a serious warning sign that they might not be able to meet their obligations in the future. The company explains how they recognize revenue. They have a few business lines, selling RSS feeds, providing links to podcasts, and its services like server leasing and technical support. They follow a standard 5-step process for revenue recognition. For its services, revenue is recognized over time as the service is provided. For RSS feeds and podcasts, it is usually when the customer gets control of the service, typically upon invoicing. Breaking down their revenue by segment, for the 3 months ending the 30th of November 2025, its services made up about 65% of their revenue, bringing in around $8,500. RSS feeds accounted for the remaining 35%, generating roughly $4,600. This is a shift from the prior year when they had no revenue from these segments. This shows a significant push into these areas. Here we see the details about their stock. They have a lot of common stock authorized and issued, over 223 million shares outstanding. They also have preferred stock. The details about debt conversions into stock are pretty extensive, showing a history of converting debt into equity. This is a common way for struggling companies to manage their debt, but can dilute existing shareholder value. This section highlights their dealings with related parties, specifically director Natalia Petronetska. As of the 30th of November 2025, there was about $145,000 due to her, which were unsecured and interest-free advances for working capital. They also had payroll liabilities to her totaling about $235,000. A significant amount of debt has been converted into restricted common shares for her and other related parties in the past. This reliance on funds from a director is a strong indicator of their funding situation. This section details various agreements and promissory notes, showing how they've acquired assets and how some of these have been converted into company stock. For example, a data purchase agreement with IDQ Logic Limited for over $100,000, partly converted to stock and the rest paid off. Another with MarketBiz Limited for over $109,000. With a portion converted to stock, and an RSS purchase agreement with IDQ Logic Limited for $28,000, which was also converted to stock. This pattern of debt conversion into equity seems to be a recurring theme. The company explains its business structure. They were originally Band Rep Management, Inc., and then renamed. They acquired Cannabis News LLC and a related application. Now they operate 4 main business lines. Its services covering technical support and server leasing, marketing services which aren't generating revenue yet, the Cannabis News application which also isn't commercially viable, and the sale of RSS feeds and podcasts. The IT services and RSS podcast sales are their main revenue drivers. Here, they explicitly compare their performance. Revenue increased from $0 to $13,000, mainly due to a targeted customer outreach strategy. The cost of revenue increased by 71%, primarily from acquiring RSS feeds. Operating expenses decreased because professional fees for audits were higher in the prior year. They had a net loss of $28,000 in 2025, down from $41,000 in 2024, a 32% improvement in loss, but still a loss. This section reinforces the going concern issue. They have very little cash, about $467, and a significant working capital deficit, over $423,000. Their cash needs are met through selling services and loans from their director. They admit their auditors have issued a going concern opinion. They state that their disclosure controls and procedures were not effective. This means they might not be reliably capturing and reporting all the important information required by the SEC on time. This is another red flag regarding their internal processes. Good news here, no pending or threatened legal actions against them. This section lists exhibits like certifications required by law. It is standard stuff for these filings, showing they are complying with reporting rules. So, what is the big takeaway from SkyCentury Investment Inc.'s Q3 filing for the 30th of November 2025? Well, they are clearly in a growth phase, actively trying to generate revenue by focusing on its services and content sales like RSS feeds. The significant increase in revenue is a positive sign, but it is overshadowed by their still substantial net losses and a deeply concerning working capital deficit. Their reliance on related party loans, especially from their director Natalia Petronetska, and the going concern warning from their auditors are serious alarms. They are spending money to acquire intangible assets like databases and RSS feeds, which is a strategy to build future value, but it also adds significantly to their costs. The fact that their disclosure controls and procedures are not effective is also a point of concern, suggesting that timely and accurate reporting of crucial information might be a challenge. Looking at the numbers, it is a mixed bag. On one hand, they are generating revenue and shrinking their losses, which shows effort and some progress. On the other hand, they are still burning cash, have very little actual cash on hand, and their financial stability heavily depends on external funding, particularly from their director. Their strategy seems to be heavily focused on building digital assets, which is forward-looking, but the immediate financial health is precarious, in my opinion. SkyCentury Investment Inc. is a company focused on building future revenue streams through technology and data assets. The strength here is their diversification into it and content services, and their history of converting debt to equity shows a willingness to structure their finances creatively to keep operations going. Extremely low cash reserves, a large working capital deficit, and a management team that acknowledges their operations are not yet fully financially sustainable without continued external support. The going concern note is the most critical piece of information here, indicating significant doubt about their ability to continue operating for the next 12 months without additional capital or successful revenue generation. They have opportunities to grow in the IT and digital content space, but the risk of not securing enough funding to bridge the gap between current losses and future profitability is very high. Alright, that is our breakdown of SkyCentury Investment Inc. Latest filing, what is your take on these numbers and what they signal for the company's future? Do you think their strategy will pay off, or are the risks too substantial? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And don't forget to subscribe for more deep dives into corporate filings. And again, join the conversation in our Discord community. The link is in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.